Meet Jose. Jose has been wanting to invest in real estate to grow his wealth. While exploring his options, Jose has come across a dilemma. Should he invest in a single-family or multifamily property? Jose asks his father, Kyle, who is an active investor. Kyle explains that typically multifamily investing is less risky and more profitable for an investor. Jose wants to know why this is. Kyle explains that with any investment, there's a risk at hand, but multifamily limits that risk. For example, it's unlikely to have an apartment that obtains 100% vacancies, and if vacancies do occur, there will still be cash flow collected to cover the expenses of any vacancies. Alternatively, these risks are very prominent in a single family where a single vacancy will hinder all cash flow, leaving all expenses held upon the investor. Kyle goes on to say that with a multifamily property, investors can force appreciation. Although single-family homes can be renovated to increase the selling price, single-family homes are at the mercy of the market and the prices of homes in the same neighborhood. Multifamily properties are not at the mercy of the market and have the opportunity to force appreciation, increase NOI, and the return on investment through many different strategies. Jose is thankful to his father Kyle and finds that multifamily investing lines us with his financial goals and is excited to get started.